What's going on, everybody? Hope you're having a good morning, afternoon, whenever you're watching this. I want to make this video to go over and kind of discuss, right, how I use volume imbalances. So if you guys have been following the live streams for some time now, you'll see that we really take advantage of volume imbalances, right? A little differently than I would say most people kind of use them. And I just had a lot of questions about really how I utilize them within my trading. So I wanted to make this video just to cover some certain, I guess, aspects of the volume imbalance and how I go about, right, just using it within my trading plan. So to begin with, we should first just kind of clarify what a volume imbalance is for people that may be unsure. And what it is, right, an actual gap between where a candle closes and where it opens. So we had a good example here. This is Monday's price action today, right, the 14th. You'll see how this candle closes, right? We make a wick high, we close, and then instead of opening right on the close like we would kind of expect, right, we gap here. So we close, we gap, and that in itself is the volume imbalance. So you really need to wait for the actual candle to close to solidify it, because the volume imbalance becomes, right, this gap in price here. And then within this gap, there's a few different ways that we can actually utilize this. So that's kind of what we'll cover now, right? Just first, I want to show you what obviously a normal candle would look like, right? So here's a normal candle next to a volume imbalance. This candle closes. Next candle opens right on the close, right, as it should be. Next candle creates a volume imbalance, and you could see the difference where this candle closes and we open higher than the actual close. Oftentimes, right, so we'll get into it now, what you'll notice with the volume imbalance is that price will wick back into the previous candle before running. So if we have a volume imbalance created and we're already expecting price to continue to move in that direction, right? So in this example, bullish volume imbalance. Once this candle closes and opens here, you will often see price reprice into the candle that had just created the volume imbalance. And this is really just to, right, kind of reprice into that area. It doesn't like being completely inefficient, where there's still going to be a volume imbalance here. But if we were not to even return into this area, that's going to be an open gap. So oftentimes that return into the previous candle will just be, right, a quick reprice before price continues in its given direction. Right, here's a good example of that. To where we open higher, we reprice into this candle, and then continue higher. Oftentimes, we will actually reprice right into this close. But with it being a Monday with no news, price is a little more jumbled here this morning. We'll see if we can't find some better examples. It's still good to show how, right, these kind of play out and what the actual volume imbalance is. So now that we understand that volume imbalance, let's go and talk about how I actually utilize it within my trading. So I really have three different ways that I kind of go about utilizing it. We can write them out. Right, the first is a simple entry technique. Or I guess we'll say, right, I wait for a retrace into a volume imbalance. So that's the first kind of way I go about utilizing them, looking for a retrace into a volume imbalance to get long. Right, the second way is the more advanced way that we've kind of spoken about and you've seen play out a little bit, to where we'll enter as soon as, right, so retrace into volume imbalance. We'll say second way we use them is aggressive entry on a reprice into volume imbalance. So a little bit different, where I kind of want to go over these two because they kind of sound the same, but as we explain it, you'll see the difference, right? So the first idea of retracing into a volume imbalance. This means, right, I'm already looking, or I'm already long. I'm trying to just find an example here for you guys. Right, here's a good example here. So this first entry technique, the retrace into a volume imbalance, comes when the volume imbalance is actually already created. So here's a good example, right? Because we have a bullish fair value gap. So let's say we're looking for longs here and we have a bullish fair value gap that we're looking at. Notice how when we leave this bullish fair value gap, what do? We leave it with that volume imbalance. So in this instance, right, I'm waiting for the volume imbalance to close. Not necessarily close, but just for this candle to close so this actually stays open. And once we notice that this volume imbalance remains open, right, the entry comes on the retracement into that. So this candle closes, volume imbalance remains open. Entry would come on the very next candle to trade into that volume imbalance, right, and stop just underneath the swing low. And when you're doing these type of entries, it really depends. A little subjective if you want to use the high or low. So in this case, because the low of this volume imbalance lines up perfectly with the bullish fair value gap, I would use the low. Right? You can use the high. It really depends on personal preference. Oftentimes, there's not much of a distance between these two, so it really doesn't matter too often. Right? That's kind of the first way, to retrace into the volume imbalance, wait for that entry, then get long. The second way, which is the aggressive entry on a reprice, is, right, here's a perfect example of that. So we have just ran sell side liquidity. Right, we hold at the midnight. And now, when we create this volume imbalance, so as soon as this candle closes and this candle opens here, this second aggressive entry on a reprice, right, occurs as soon as this candle taps this candle's close. So as soon as this candle closes and this candle opens higher than this candle's close, and there's no wick here, right? There's a wick now, but if we're following live, there's not going to be a wick. As soon as price taps that, that's a potential long entry. Here, like this, stop loss going underneath the candle that creates the volume imbalance. Because if we're going to trust the volume imbalance like this to hold, right, in this instance, we're kind of forecasting that this volume imbalance gets created. So that's why it's called the aggressive entry. Because we're going in aggressively, right, kind of forecasting that this volume imbalance will remain open before it actually does. And if that's the case, this candle here should not be breached. It's low. So the stop goes always underneath the candle that creates that volume imbalance. And in this instance, it's even better because it's a swing point right underneath a liquidity level. But you'll see that this aggressive entry comes, and I use it more often when I don't believe that the volume imbalance will be retraded into. So this is actually a nice example of that. Because if we look, first of all, heading into this, right, what are we doing? We're consolidating. On a day where we're not going to have news, so we're already expecting a seek and destroy condition, right? So we have to have an underlying narrative before we can just kind of use these volume imbalances willy-nilly. We really have to understand what's taking place. So in this instance, I see that and I'm understanding, okay, seek and destroy, no high impact news, holding that midnight level. So when I see us run this short-term low, I'm already expecting a reversal. So we clear the short-term low. As I see the bodies hold on the midnight, I'm already looking for higher prices. Right? I see us create 1, 2, and now the third candle body that wants to hold this midnight, right, and continue higher. So I'm okay taking an aggressive entry here because, right, we're in a seek and destroy environment. We've cleared a short-term low, sell side liquidity. We're holding at a very important discount in the form of this midnight level. And we have higher targets here. So as soon as this volume imbalance gets created, I would be comfortable longing is right as this candle's close gets hit, right? Just kind of, we spoke about stop underneath its candle low and then targeting just, right? We can go swing high. And at that point, the target's up to you. So you can go an obvious target of like relative equal highs. You can go right new week opening gap levels like we've traded into. At this point, it's really up to you where you want to get out. We're just looking at the actual entry. And it's nice to show because we actually get both entries here in the same price leg. So this would be the aggressive entry, entering as soon as this candle hits. And you see, right, we don't return into this volume imbalance. And that's how we can really understand when or when not we can expect volume imbalances like this to be retraded into. So we get in on the aggressive entry, the volume imbalance remains open. We now close above the bearish fair value gap. So following narrative, right, we close above here. So now that we have an inversion here paired with a new bullish fair value gap, as well as what? This is what we spoke about last week. So I guess I don't want to get you guys too confused, but since we're here, we'll go ahead and add another kind of way that we use them. And that's just to monitor order flow. Oh, not a question mark. So I don't want to get you guys lost here, but retrace into a volume imbalance is one way, right? The aggressive entry, another way. And then the third way that I like to use them is simply to monitor order flow. And I want to point out this example here. So you see, after creating the bullish volume imbalance, we then create very quickly a potential bearish. And that's because you see that where we close, we actually open lower, right? So it's kind of like this. This candle closes and opens lower, bearish volume imbalance. This one gets left open, whereas we see in this one, if this was to remain bearish, we would expect that from this open to close, right, price would have continued running lower. But when we see a volume imbalance get negated, so that's what this is. It's a bearish volume imbalance that has now been negated because price blasts back up and through and closes above. And especially when we see that happen while creating a new fair value gap, this is exactly what we spoke about last week, right? These new fair value gaps that get created off of negated volume imbalances, very powerful. And if they're already in line with our current narrative, we could really expect these to hold at a very high probability, right? So when we have something like this and it's paired with an inversion, right, this is a very clean area to look for entries. And you see that it holds us beautifully. But let's say you're not confident in that, right? This is how we can use that first kind of retrace into volume imbalance entry here. So let's say you don't trust this fair value gap. You're waiting for price to give you some type of confirmation. Well, now, right, we've repriced into the low. And as soon as we close above here, that means this fair value gap has now been balanced and we're okay to look for longs off of it. Right, so this volume imbalance is really confirming this fair value gap, so you can use it as an added confirmation, right? And that kind of ties into monitoring order flow as well. Because here we see, okay, we're negating a bearish volume imbalance and we're pushing higher while creating a new fair value gap. That is a bullish signal. So we're already expecting this fair value gap to hold. And when we see us leave now this fair value gap with the volume imbalance, right, we could very much trust this. This is a very high probability volume imbalance to trust. And as you see, we do get a little bit underneath, simply returning into the actual fair value gap. But notice how the candle bodies hold that level, right? And then once we get above it, now it's off to races. This is actually a good thing to point out as we continue to monitor order flow. Number 3. What do we have here now? So we have an 830 level, important key level. Right above that, we look for higher prices. Below that, we often speak of, right, looking for lower prices. So in this instance, we're already bullish. We have seen the aggressive volume imbalance play out and remain open. We have seen a negated bearish volume imbalance turn into a bullish fair value gap. And now we have seen a bullish volume imbalance be created as we're leaving that bullish fair value gap. So a lot of things lining up and showing us that the market wants to continue higher. And right, the real nail in the coffin, cherry on top, is this. We smack right into the 830 level. We then, once again, create the bearish volume imbalance. But just like we did here, right, where we open lower, negate it, we open lower and completely negate that volume imbalance while closing above the 830 and the swing point. So when I see something like this, right, this continues to confirm bullish sentiment because we're breaking above a swing point. We're breaking above the 830 level while also negating the volume imbalance all at the same time. That's not random. And although there's no fair value gap here, there is a new discount, and that's the 830 level. So when you see something like this, you can still be confident using, right, the 830 level paired with now the negated volume imbalance. Because let's think, right, from where it opens to where it closes, that's still technically the volume imbalance. And where does this candle wick return into? Perfectly right into that low. Right, it's of course hitting the 830 level. That's where we would enter, stop underneath the volume imbalance candle. But it's just nice to see how that precision is respected. And from there, right, we continue to run. And you see how, right, once again, so this is a retracement volume imbalance entry, right, number 1. As we continue to run, the volume imbalance gets created. It gets left open. And now we can trust any retracement into that, right? We could look for longs. So we leave short, especially when notice how we have equal lows here. So if we're building liquidity just above that level, right? That's just a good indication that price is going to want to find support here. Obviously reverse everything here that we're doing for a bearish order flow. But right, you see that we come into it once. That's really the only time we need to come into it. And then we run after clearing these equal lows. All right, so a little long, but there's a few ways that we go about kind of utilizing these volume imbalances. We can get a little bit more in depth as well. Oops. This is going to be a little bit longer video. May have to watch it a few times. And as always, hit me up with any questions because this is a pretty advanced topic, right? Subject that we're covering here. So aside from the actual entry points and whatnot, right, the obvious ones, we can also use them as inversion levels. So we're going to add another. And when I use them as inversion levels, I like to do it mostly with a time element involved. So today, once again, really giving us a good kind of setup to continue to cover these topics. Right at 9:30, right? I like the 9:30 opening. So when I am expecting 9:30 opening to be significant or create some type of Judas swing, I want to see what happens right then. Right, so right at 9:30, what do? We open with a volume imbalance. So already opening 9:30 with a volume imbalance, that volume imbalance is going to be key to me the rest of the morning until we move away from it in either direction. All right, so let me pull this out like this. And if I drag this out, you'll see the precision that price uses all morning before, like we say, right, we finally expand and get away from it. We trade underneath, right? We trade back above, creating a negated bullish or a negated bearish volume imbalance. Trade underneath again, creating a fair value gap, trade back above. Notice this candle's wick hitting it perfectly. Right, one more time, coming back below. So all of this in here is really just chop. Right, it's that 9:30 opening chop. No news on a Monday, so this isn't surprising, but we'll still see how these levels are being respected. And once we finally do flip, right, and get bullish, we still use that level. Notice that. So we finally run the short-term lows, we hold the midnight, we create the aggressive volume imbalance entry, leave it, and notice where this negated bearish volume imbalance returns into. Right, so first we were speaking of it, we were just saying how it wicked lower, but what is it wicking into? Simple. The original volume imbalance created at 9:30. So right, you can use these volume imbalances, they cut through candles. That's another thing, right? It's not a one and done thing. If price is near them and we understand that price is going to reference them, right, we continue to utilize them. And as you see here, perfect precision. Wick into the low, just like we did here, before running higher. And as we spoke about now, right, we have all these volume imbalances, but it's also nice to show that there's also inversion ones in here. So we already covered the actual retrace entry, but now we can use these, right? Because let's say that you still didn't trust that this was going to hold. You have two bearish volume imbalances that have formed. Well, when we get above this one, right, our attention now becomes, well, this now may offer us inversion support. And if I drag this level out, surprise, surprise, look at that, right? So you see how there's many ways to enter using these. And that's kind of why it is such an advanced topic, because it's fairly subjective, right? You can use an inversion. Say you wanted to use the inversion to get long, that's fine. Instead of this one, right? That's perfectly valuable. You could still use the actual fair value gap, right? So you see how there's multiple opportunities. The volume imbalance just gives you, right? I kind of see it as an added weapon in the arsenal. So if I can't find a clear model or something, right, I could use the volume imbalance. But you see how we create that inversion, right? We create the bearish, we close above it, and then very next candle, we're really 1, 2, 3, 4 times we come into it, holding that level perfectly. Wicks go lower, of course, but notice the bodies. Same thing here now, right? Another bearish volume imbalance that we close above. And because this one is already above, right, the fair value gap, this is more of just monitoring order flow. You can use this one if you want. I prefer this one because it's inside the actual fair value gap, right? That's important for me. So I like to pair concepts together. So the fair value gap paired with the inversion, I like that one. Whereas this one, I'm more just monitoring to make sure price kind of respects that level, right? And you see that we kind of hesitate here a little bit, 1, 2 candles, but eventually punch up and through it. So those are another few examples of that inversion volume imbalance. Let's see, one other thing I guess I wanted to cover was how I use them as far as, right, cutting my risk in the marketplace. Someone had asked how I go about doing that. So kind of the 5th way, long list, is we'll say I use them to, right, mitigate risk. So now when I'm already in a position, so let's say that we get long here, right, we turtle soup this, understanding it's seek and destroy. As soon as you run these short-term lows, we're going to want to reverse. So what I would do is, you often see, right, I'm turtle souping with my stop underneath a swing point that shouldn't be broken. Right, I'm going here at this fair value gap. I wouldn't want this fair value gap broken. So let's say, for purpose of this example, right, we have an entry set like this. We get tapped in and price starts moving. When I see us create a volume imbalance in the direction that I'm looking for price to basically deliver, right? So I'm long here expecting higher prices. If I see a bullish volume imbalance get created, I do not want to see the candle that basically, right, creates that be broken. So that's these two candles here. So as soon as this got left open, right, my stop would immediately be moved to break even. So I'm already mitigating my risk because a new discount in the form of this volume imbalance has been created. And if we're going to remain bullish, right, this should not be violated with a candle body. So really, I'm comfortable moving my stop even underneath this candle here. Right, and now I just continue to follow order flow. So we see price, right, continue to run up. When I see now another volume imbalance in this form, this one is a negated volume imbalance turned bullish. Right, this is even more of an indication that we're bullish than this for me, because this one had a chance to remain bearish. Instead, it returns into the inversion and then creates this huge displacement, leaving behind a fair value gap. So now when I see something like this, I'm comfortable moving the stop to, right, same idea, the candle that creates that volume imbalance here. And notice how this lines up with this inversion, right? So that gives me an added layer of comfort because we have two areas that should support price if we're going to come back down into it. So my stop is okay being underneath, right, just underneath an area like this. And you see we get close to it, right, but we still hold, which is nice. And now same thing here. As soon as this volume imbalance gets created and left open, stop can get moved to now this swing low because this newest discount should hold us. Right, so you see how I just continue to use these to follow price action and mitigate my risk as price continues to move in my direction. Right, I would have done the same thing here. So as soon as I saw this, right, same way it was here, as soon as this negated bearish volume imbalance turned bullish closes, the next swing point, right, is my stop loss. So I continue to move up my stop loss as volume imbalances are created and they're getting put underneath swing points just below those volume imbalances. Well, so that's really much the basis on how I use these to go about, right, cutting and trimming my stop loss, as you see in the videos. I guess one thing that I can point out, it's kind of a little harder because it's going to be more conceptual, is let's say that I was getting long on this fair value gap. All right, so this is another way that I go about mitigating risk with the volume imbalances. Let's say I'm long here on this fair value gap, okay? And I have a stop loss underneath the candle that creates it, just like this. If I were to see, right, this volume imbalance, if this candle were to close underneath the fair value gap, I would immediately cut risk, right? Not even letting the full stop loss be traded into. And why is that? That's because we had created a bearish volume imbalance here, while also negating, right, the bullish fair value gap. So this is only if this candle was to close below, right? So this is a theoretical because obviously it held bullishly like we've been talking about and ran. But I just want to explain how I go about cutting risk early and not letting my full stop be hit if price moves against me. So if I was using this fair value gap and I notice that we create a bearish volume imbalance into my entry and then close that candle right underneath the fair value gap that I'm entering on, I'm immediately cutting risk because we have, like I said, negated a discount and created a new premium in the form of a volume imbalance. In this instance, obviously though, right, this candle doesn't close underneath. So we still trust and really respect this fair value gap. All right, so once we get back to the inversion, we continue to run, and that played out well. So here's an example, another example of just how I can use it to mitigate risk. This is from Thursday, right? So we had higher objectives here. We fell just short of. But let's say that I was trying to long using the volume imbalance. So let's say that we were using this to enter on, right? Stop loss underneath this candle, and we're targeting this high. So we come into it the first time, right? I'm not necessarily worried about us simply closing underneath this one because we have a fair value gap sitting here. So just like I spoke about in the past example of waiting to see a candle close underneath to cut risk, that's what we would do here. Right, so we have the volume imbalance first. That's kind of our entry zone. And now we're watching, right? We're watching. We close underneath, we get back above, right? This candle gets close, but it holds the fair value gap. So we're still waiting, right? Especially because the next candle creates a bullish one, gets back above it. So here we're all consolidating, right? We would have to hold. It would just be kind of an ugly delivery, but nothing to cut risk yet. However, this candle here, as soon as I see this candle now, especially because notice what happens. We create a bullish volume imbalance, right? We close here and we open higher. But what happens? This one doesn't remain open. Instead, it becomes a negated bullish volume imbalance that crashes back underneath this fair value gap. So as soon as I see that, right, this negated bullish volume imbalance closing back underneath our entry volume imbalance, and especially closing underneath the fair value gap, risk is immediately cut. Because to me, in my mind, right, this has now become a reversal signal. I don't see us holding this anymore. So I want to get out without taking the full loss. And you see that how that would help us, right? Because as soon as that happens, we then use this fair value gap as an inversion level and attack where our stop would be resting. So in these instances, right, you're still going to take some loss, but you're cutting that loss, right, in half almost sometimes. And I think that's really important because we're really in the business of, right, losing money the right way. We're professional losers, as I've said before. So losing is going to be inevitable. And because I understand that, all I aim to do is make my losses as small as they can be. And this is a great way that I have found, right, to mitigate those. And you obviously see this plays out well, right? We had a short someone took here that played out well as well. So you can see how these volume imbalances and basically price signatures can negate us taking the full stop out. I think we'll go ahead and wrap up this video here. Right, a little more advanced than usual. So if you do have questions, please don't hesitate to ask. I understand that there's a lot of moving parts in this concept, right? It can kind of play out a lot of different ways. And even in this explanation, it could be rather confusing. So if I do need to even make another video and kind of go over each one of these in their own individual way, right? That's something that I could possibly do as well. But yeah, just let me know. And I did hope you guys found that one helpful. Thanks for watching. And yeah, we'll see you guys around.